Peace family, it's your boy Tez, local financial ninja, providing everyday knowledge on personal finance and money matters. Today what I'm going to talk about is ETFs, that's short for exchange traded funds. And basically exchange traded funds are mutual funds that are traded on the open exchange like stocks. So just a quick refresher, what a mutual fund is a financial product in which multiple investors pools all of their funds together to invest in a diversified portfolio of assets. So benefits of a mutual fund are just instant diversification, gives you an access to a wider range of products, and it hedges against your risk to protect you against that volatility in the market. So instead of being invested in all of the separate assets in that underlying funds, separately, or just some of them, what you'll do is you'll invest in the mutual fund itself. The fund managers, they'll pick and get rid of different investments depending on the strategy of the fund, and you don't have to worry about any of that. It's like a set it and forget it model, and then you earn and your portfolio grows as you're invested in mutual funds. So typically with the mutual funds, they're very limited, or most of the time they're often limited, in the sense that you have to go directly to the mutual fund company and establish an account and adhere to their rules or their requirements to open up that account. Some of those requirements are actually having the account directly at the mutual fund, not being able to invest in specific products and things that you would like to at your will, and also having to have certain minimums to actually have an account at those companies. So with the implementation of an ETF, you can trade in your regular normal brokerage account and still be invested in these types of products. So ETFs, they're traded on an exchange just like any other stock that you would look up a ticker for, like on Robinhood or Webull or Thinkorswim. You can look up these different funds and you'll get the same benefits that you would in having a mutual fund direct at a company. So I really love mutual funds and I really love ETFs because there's so many different ETFs, there's thousands of them, and they have so many different strategies. Particularly in the past couple of years, I had a good portion of my play money in my brokerage account with Robinhood and dividend ETF. So some of those all of those ETF, I made sure that they paid some type of dividend each month, and I just kept reinvesting that money, and that was a really good benefit for me at the time because I was doing a lot of less active trading at the time. But I really love those things. They have different ETFs for different but different sectors and different business models and things like that. So you can get a cannabis ETF, you can get a technology sector ETF, you can get a bank ETF where it'll invest in just a basket of different banks and things like that. You can get emerging market ETFs where it'll just invest in a bunch of different companies that are in third world countries that are very innovative, and they're like high value growth plays in the long term. So just depending on what you want to get involved in, whether it's energy, consumer goods, cyclical goods and things like that, defense products and things of that nature, they have an ETF for you. So if you have any questions, any thoughts, people, go ahead, hit me in the comments. Be sure to like, subscribe, and share the video because we're lifting as we climb, baby. But until next time, peace.